Hello everyone, this is a preparation video for paper 2, so A-level paper 2. This paper is the second one that you study and sit as you go through your A-levels. It covers theme 2 and theme 3, so managing business activities and decisions and strategy. I want to in this video talk about what to expect from this paper, what kind of patterns you quite often see, and some of the key topics that are just worth making sure you know because they create kind of the links between theme 2 and theme 3. So to start off with, if you've watched the paper 1 version of this for the most part will be the same because this the sort of introduction section, because the structure of these two papers is identical. You've got two sections, you've got 50 marks in each section, so a 2-hour paper is 100 marks in total. And in terms of structure, it's exactly the same: 4 marker, 4 marker, 10 marker, 12 marker, and 20 marker. And so my big bit of advice would be to think of it as two separate papers, to try and do each section within an hour. Try and, if you can, spend a mark a minute on each question. That gives you 10 minutes spare. So 50 marks in 60 minutes gives you 10 minutes spare. I would be using that time to go through the case studies effectively and make sure you've got good application in your answers. You'll probably need a little bit of the extra time for your 10 and 12 markers, but I think your 4 markers should happen pretty quickly. Your 20 marker you should be able to do within time. So it's that 10 and 12 marker and how you manage your time on those two questions that is the most important part. So you get a set of extracts for each section. Consider how you're going to approach those case studies. I would strongly recommend that before you read the case study, you have a look at what the questions are. Maybe even make a note in your extract booklet about what the questions are about. And then when you're reading through the case study, have a look and see if you can find points of application for each of those questions, any links to those topics as you go through. The other thing that's worth bearing in mind, and this is more common on paper 2 than it is on paper 1, but sometimes you might see in a set of extracts for section A or B, you might see more than one business, especially if it's talking about a particular market or maybe a takeover. You might see information about both businesses. Just make sure you know which question is about which business. That sounds like a really obvious point, but you'd be surprised that if you, say for example, if you start looking through something about a merger and a takeover and there's something mentioned for different businesses, but the question's only asking about the impact on one particular, you've got to make sure you kind of know what the question's asking basically so that you use your application effectively. So make sure you read the question carefully and make sure you use the case study really, really effectively. That's one of the keys to this course. In terms of structures, well, this is how I would structure these questions. For a 4 marker, you're going to get potentially 3 types of 4 marker. You'll probably get, you should get at least 2 calculation questions. You won't get a construct question because this isn't theme 1, so you won't have any drawing of graphs as such. You might have construct in terms of critical path analysis and decision trees. I'll touch on both of those in this video, but they are also touched on in the 3.3 video that's on the channel now as well. So have a look at your calculations, make sure you know you're working out, make sure you're clear on the units in your answer, make sure you're clear on the decimal points. It's always usually 2 decimal points, but just make sure you read it carefully. In terms of the explain how questions, you want to make your point, you want to explain the effect of that point, and you want to apply twice. You want 2 pieces of application, 2 quotes from the case study or 2 pieces of data in those 4 markers to get maximum 4 out of 4. For your 10 and 12 mark questions, I would use the same structure for both of these. I know that in other videos in the past I've mentioned doing 2 paragraphs for a 12 marker. I just don't think it's worth the extra time. So I would be doing 1 per each paragraph. Your however provides your balance. So that's really, really important. We're going to talk about this in a second. But if you, for example, if the question's about assess the impact, you need to have positive, however negative. And it could be the way around, by the way. How you could start with a negative, do however positive. That's absolutely fine. If it's assess the importance, is important, however, isn't important. Value, is valuable, isn't valuable. Things like that. So make sure you've got balance. That's what the however stands for. That's what the however in peach stands for. Point, effect, application or apply, circumstance, and then however. So you demonstrate your knowledge through your point, your analysis through the effect and the circumstance, your application through your apply, and then the evaluation through your however, and your conclusion, which I use a DISCO-M structure. So DISCO-M standing for make your decision really, really clear, use the words of the question, and then use some of the following prompts to potentially justify that. So it depends on, is there a factor it depends, the success depends on, short and long-term impacts, cost impact, other factors that might be important into consideration, and then the most important point potentially. I would only use 1 or 2 of those. Ideally, probably just 1 of the ISCO-M bits. in a 10 marker, maybe 2 in a 12 marker. So those are your 10 and 12 markers, but the key thing here is you want to make sure you're on time with those, and then your 20 mark question, probably the easiest in terms of structure. You've got 2 options. You want to do for and against option 1 as a peach paragraph, for and against option 2 as a peach paragraph, and then your conclusion. And if you do that, you should be in a pretty good spot. The only other thing to watch out for on a 20 marker is there's quite often, not always, but quite often a focus for the business in the question. So it could be that the business's objective is to increase market share, to increase profits. You've got to link your points back to that. So well worth having a look at previous paper 2 20 markers to get an idea of what that is. And bearing in mind that theme 2 and 3 does have quite a lot of an impact, a focus on profits, you might see that that's the one that you get, like an impact on profit. So these are the kind of the keys to success that I go through with my students. Think about what your task is. I can't take credit for that. It's incredibly cheesy. You'd think I'd had enough when I came up with the peach paragraph of trying to create words out of things, but this one wasn't actually my idea. I, for a while, have written kind of key points on a board, and a student recently said to me that actually that could have worked if I just rearranged the letters a little bit. So here we go. These are the keys to success. If you get these 4 things right, you will get above a C grade. And if you don't get above a C grade or above 50% on any of the questions, it'll be down to one of these 4 things. Timing, of course. Difficult to get good marks on a question if you don't finish the question. So make sure you get your timing right. Make sure you use the application and the case study. The case studies are there for a reason. This is called business studies. It's not called theory studies. So it's about the businesses in the question. So you've got to make sure you use the case study to support your points. If you know something about the industry, so for example, if it's about the smartphone market or the grocery market, and you know something that isn't in the case study, but you've known it from your studies, you can, of course, mention that as well. But I would be looking at the case study. You know, the case studies and the questions have been written together. They're there for a reason. Make sure you've got the right structure. So that means, for example, make sure you've got your howevers where you need your howevers. Make sure you've got your conclusion. Make sure you've kind of, I guess, hit all of the points of that peach paragraph. One of the most important parts of that structure is making sure you've got a developed conclusion and making sure you've got balance in your arguments. So making sure that however contrasts the point you just made. Positive, negative, is important, not important, like we've just talked about. And then, of course, it goes without saying that last point there, knowledge. If you don't know what a key term means, that's not a great start to answering a question. And so make sure you know your key terms. There's a bunch of resources that I'll share. I mean, I've shared a bunch of resources on this channel already about like recaps on all of the different units. So make sure you're watching through those. Make sure you know your key terms. There's Quizlet links, what I'll put in the description to this video as well, to have a look at as well, just so you can make sure you know what your key terminology means. Because, yeah, like I say, if something comes up and you don't know what it means, you're going to have a bad time, basically. So if you hit those 4 criteria on every single question, you will get good marks. That's a fact. So let's have a look at theme 2 and 3. This is what we've got. Theme 3 is the biggest theme in terms of units, but actually some of them are fairly small in terms of the amount of topics in there. Theme 2 is effectively they look at financial management within an organization and operations and external influences. There's a lot of crossover, which is what we're going to kind of hit in this video. So rather than kind of go through these one by one, I'm just going to pick on the key themes that I think come up in both of these themes, which, you know, would be the things I'd be looking for in exam questions and the points I'd be looking to make. So we're going to look at 5 different ones. We're going to look at raising finance. We're going to look at profitability and liquidity, which literally comes up twice. So it comes up in theme 2. It's taught, profitability and liquidity is taught in theme 2, 2.3. And then it's built upon in 3.5 when you get into ratio analysis and assessment of financial statements. External influences come up a bunch of times. They come up right at the end of theme 2. They come up at the beginning of theme 3. Strategic theories. Some of these, I mean, the Boston Matrix is actually a theme 1 topic, but I said this on the 3.1 video. I think Ansos's Matrix and portogeneric strategies are the 2 most important theories in the entire course, and so make sure you know those. So I'm going to mention them, of course, because I think they're really, really important. And in fact, actually, Ansos's Matrix, whether it's been explicit or not, has come up in every single year of papers so far. And then change as well, and change is at the end of theme 3, but there's a bunch of reasons for change that are linked to throughout theme 3 and through theme 2. So we'll go through these in more detail, but if you are looking at a particular one, then you can kind of skip ahead and find that little section if that's what you're looking for. I think YouTube breaks it down into chapters as well, so that should be really easy. So let's start with use of finance. Now, the first thing is finance and sources of finance is the very beginning of theme 2. So you look at internal sources of finance, external sources of finance. But why businesses use this finance is really kind of assessed in theme 3. So in particular, the link between using finance and growing. So in theme 3.2, we look at organic growth versus inorganic growth. So organic growth, where you grow by doing your own thing, starting new product lines, starting new stores, expanding, your own operations. And then we have inorganic growth, where business grows through a takeover. Well, we have to bear in mind that these things aren't cheap, and in order to pay for these things, businesses need to raise finance. So the question here is, which source of finance is going to be the most appropriate for the business? And you're going to have to consider a few factors here. And this is where that first kind of section of theme 2 and 3.2 link to some of the other areas we look at, in particular profitability and liquidity, and in particular liquidity here. Cash position. How rich is the business? How much cash have they got? If they've got a lot of cash, if they've got a lot of retained profit, that will make it more likely they'll be able to spend on this growth without having to take out external finance. But it's also worth bearing in mind how much existing external finance they have, so the current levels of debt. So that's kind of a link between liquidity and profitability and growth and sources of finance, but we also need to take into consideration the type of ownership as well. Types of ownership comes up in theme 1 in terms of private limited companies, sole traders, partnerships, etc. However, liability comes up in theme 2, and so there's plenty of links between all of these different areas. So share capital, for example, is only available for limited companies and more readily available for public limited companies. But also in theme 3, we look at shareholder pressure and the impact of shareholders and their influence on objectives, their influence on what a business is seeking to achieve, on how quickly businesses are seeking to make a profit. So really important to not just look at what the sources of finance are and not look just at what different types of growth there are, but look at the links between the two and why certain ones might be more suitable for certain businesses. So in the case study, what's the cash position of the business? What kind of levels of debt do they have? Have they expanded before? Have they got the money to be able to do this? Are there going to be pressures from shareholders to make sure that this money is recouped very, very quickly? Now, this also links to some of our financial, not financial, but our kind of like I mentioned about construct questions potentially being a decision tree or critical path analysis diagram. Well, the finance that we're going to use would be used as part of this model. So, for example, this example here on the screen, you can see there we've got launch in the current market, launch in a new market, and it's going to cost £8 or £6 million. That £8 or £6 million is going to come from somewhere, and so there's a link between the source of finance to the decision tree. Hopefully you have a pretty good idea of how to do these. This is the same decision tree example that I used in the 3.3 recap video. So what I would recommend is, if you've maybe not done this example before, pause the video and give it a go. Just check that you kind of understand how this all works. The answer for this, I believe, is in the 3.3 video. So not to try and be one of those guys who's like, go and watch these other videos, but maybe go and watch that one if you want to check out your decision trees. So there's a link between decision trees there. And then critical path as well. This is not the same critical path that I mentioned in the 3.3 video. I used a more simplified one there. But that whole concept of these projects, critical path analysis is all about looking at a project, looking at the potential risks to that project being delayed, and effectively just trying to make sure that we're using our finance effectively. The last thing you want to do is spend a huge amount of money on a project and it doesn't work. And so that's kind of the key to critical path analysis. And so while that link won't necessarily help you calculate the answers, it is really worth knowing the risk involved with these decisions and why these techniques are employed, because they're trying to reduce that risk or make sure that it's going to work effectively. So again, critical path analysis was covered in the 3.3 recap, but here is another one if you want to have a go at it, starting with your earliest start times and latest finish times. Pause the video and give it a go. There aren't any answers to this one though, although I'm sure someone will put some in the comments, so you can check on there if you'd like to have a look. We also, I guess to go a little bit further, I'm going to link this to ratio analysis a little bit as well. Loan capital, we talked about existing levels of debt. We've got to consider how much loan capital the business already has, especially if they're considering taking out any more. And then we've got to think about the impact that this has on the capital employed. Capital employed is a really important term because it's used in two of the calculations that you study in ratio analysis: return on capital employed and gearing ratio. So if you have a look at the right-hand side of this slide, you can see that capital employed is all of the finance that the business uses to try and make a profit. And it comes from two different sources, internal finance and external finance. So the finance from within the business, the finance from outside of the business. You can find this information on the statement of financial position. So the internal finance is the share capital and the retained profit, which if you add those together, you get total equity, which is right at the bottom of the statement of financial position. And then the external finance, the long-term borrowing, the long-term debt, that is what we call our non-current liabilities. And so that's also part of the statement of financial position. And if you add those two together, you get your capital employed. Two really, really important key terms. But the whole concept, first of all, you just need to know them if you're going to be able to do those calculations. So if you see ROCE or you see gearing, you need to know what capital employed means. Sticking with the financial theme, let's have a look at profitability and liquidity. You just need to know what these terms mean. You need to understand the two documents there, but they are covered in the 2.3 video. They're also covered again in the 3.5 video. So have a look at those on the channel. Profitability this is the main way a business measures its long-term success. And so when we think about strategy, which is what theme 3 is all about, profitability is the main way we measure that. It will determine how well a strategy has gone. It's important for the shareholders because the profit is how they get their dividends. That's how they get their return on the investment. But also if you make a huge amount of profit, that can allow for reinvestment into the business in the future. That can allow for internal finance, which then obviously reduces long-term borrowings, reduces interest payments. You don't have to borrow it at all, in fact, because it's already within the company. So from a shareholder's perspective, this is really important, but from a growth perspective, this is really important as well. So make sure you understand kind of the concept of profitability. Liquidity is the one that students usually find a little bit more tricky. This is about the cash position of the business. It's effectively how well a business is able to generate cash to pay their bills. It's effectively the skills that the business has to pay the bills, to borrow a term from like the 90s. This is going to determine how able a business is to make certain decisions. So, for example, do they have the cash to be able to make these decisions? Will they require any external finance? And one other note that I think is really, really important. I often get students saying, what do you think is going to come up? And I always hesitate to guess, because the last thing you want to do is push a student in a certain direction and find that they've only prepared for that. And if it doesn't come up, you feel bad. You've got to learn the whole course. One thing that I would keep an eye out for, though, is working capital. Working capital has been assessed a couple of times in the last few years. Typically, what it seems to be the case is if something isn't answered very well, they'll want to reassess that again pretty quickly after, within the next few years. And working capital has come up a few times precisely because it hasn't been assessed very well. It hasn't been answered very well. A lot of students don't know what working capital is. So working capital is effectively the day-to-day finance available for a business. In effect, it's your current assets minus your current liabilities. So you think about your current ratio. Your current ratio is an assessment of your working capital, basically. It's on a short-term basis, how able are you to generate cash that you can then spend? You need cash. If you don't have cash, you can't pay your bills. And if you can't pay your bills, your business might close. In summary, if you're thinking short-term, your priority has to be cash. If I had a student start a business, my first kind of big bit of advice for the first year would be just to survive, right? Survival is the main aim of a new business. And to survive, you need cash. You don't necessarily need to make a profit straight away. As long as you've got other methods of earning cash or receiving cash, you could potentially take out some loans, you potentially could get some investment or what have you. That's fine in the short term. Cash is incredibly important short term. It's important long term as well, but in the first year, cash has got to be the priority. 5 years down the line, though, you should be generating enough profit that is the form of your cash flow. You don't want to be 5 years down the line and still relying on external finance just to keep the bills, paid and the lights on. And so just understanding the difference between those two is really important. Profit is a long-term result of a decision. Cash flow is the immediate spending power that your business has. And in the short term, cash is the most important thing, because without it, your business could just shut down. External influences is a big theme that comes up quite frequently. There's one link to this in terms of the economy at the end of theme 2. The economy and all those different economic factors will affect the level of risk a business is willing or able to take. But if we think about Porter's generic strategies and his theory of competitive advantage, it's going to affect businesses at each side of this market in different ways. So there's Michael Porter in the middle. The low-cost producers, for example, they're going to be the cheapest available product. They're trying to keep their costs as low as possible so that they can have low prices. when an economy is not doing so well, those businesses tend to do fairly well. You can link here to income elasticity and what have you. We've touched on that in other videos, so I won't go into depth on that now. But if you are wanting to know a little bit more about that, look at the 1.2 video. The low-cost producers do pretty well when incomes are lower because people look for cheaper alternatives. The businesses that are more highly differentiated, they're trying to be kind of unique. They're trying to be maybe a bit more differentiated, maybe potentially higher quality, higher price. They will rely on the economy to be thriving in order to be incredibly successful, as well as a range of other factors as well that they'll consider. And so the impact of the economy, the impact of inflation, exchange rates, unemployment, taxation, all of those different areas will have a significant impact on businesses' strategies. So that's a really, really important factor there to consider. You might be able to, in an answer, link a question that's based around the economy to these potential concepts. Another area in theme 3 that links to this quite significantly is Porter's 5 forces. This was covered in the 3.1 video, but Porter's 5 forces is all about kind of how much competition there is within a market and how easy it is to be competitive within a market. So the five factors, the 5 forces are shown on the right-hand side there. So the rivalry amongst existing competitors, the threat of new businesses joining the market, the threat of alternative products being used instead of the product you're selling, how much bargaining power the buyers and the suppliers have, based around kind of how many there are and how unique what they provide is. So there's a link there between Porter's 5 forces and market growth and market size, all of those different kind of general tenets of business studies. So let's just focus on some of those strategies a little bit more in depth. There's a lot of strategic theories that are used by businesses to inform the directions in which they go in. These are the 3 main ones. I'm going to recap them fairly briefly. Ansough's matrix is the main one. This assesses how much risk is involved in a strategic decision. As I said, this has come up every single year, maybe not necessarily explicitly, it doesn't necessarily say market development, product development, but this concept has come up where you've maybe got 2 options and you can identify that one is market development, one is product development, or what have you. The key here is that risk. A strategy is more risky if it's moving further away from what your business already does. So if you're doing something you're very comfortable with, if you're doing something you've had a lot of experience with, whether that's selling to the same market or selling an existing product, then there's a lot less risk to that strategy than if it's something like diversification, which is brand new. So you've got to be able to assess, okay, what's the business doing here? Are they selling a new product or an existing product? Are they selling it to the same market they've always been in, or are they selling it to a new market for them? And so the idea is that that concept of risk increases the further away we go from what we already know. The generic strategies theory, we've touched on this already. I'm not going to do a huge amount on this. It's obviously, of course, in the 3.1 video as well. But if you think about businesses as low-cost operators or high differentiation, the only real distinction between the arrow I showed about 2 slides ago and this is the difference between mass market and niche market. So we need to be aware of what is our target mass market or niche market, and what is our area of advantage. And so businesses should fit into one of these 4 categories based around what they're trying to achieve. It's called generic strategies because Porter suggested that all markets operate the same way, thus the term generic. All markets have that mass market or niche market sections. They have that low-cost operator section, the high differentiation section. But the Boston Matrix, this is a theme 1 topic, but it is referred to in theme 3 as well, 3.1.2. So it's worth just mentioning. This is a product portfolio analysis tool. So this is where you would assess the range of products that you have, and you might identify some areas for potential investment. So you would look at your list of products and you would try to identify what is working, what isn't working, what requires advertising or investment to potentially, take advantage of something that could be great in the future, and also what isn't working and what doesn't require investment. So we've got our star products. These are the ones we want. High market share in a high growth market. That's going to lead to profit. Our problem childs or question marks, depending on, which term your teacher uses. They are the low market share, but in a high growth market. So they potentially could become star products if they can build market share. Might be difficult in a high growth market that probably has quite a lot of investment and probably has quite a lot of businesses that are trying to be star products. But if it's possible, it can be really, really profitable. The cash cows, these are the products with high market share, but the market's not really getting any bigger. The key with these is if the market's not getting any bigger, then there's less chance of real kind of shocks to the market, I guess, unless the market just disappears because it's replaced by something else because of technology. But if you take something like chocolate, for example, chocolate's not necessarily getting more popular, but the businesses at the top of that market, like the Cadbury's, the Dairy Milks, the Galaxies, etc., they can effectively just kind of milk that cash cow. That's kind of the basis of that term. So as long as it continues generating profits, they're all good. The dog products, they're fine as well if you're making a profit. But if they're not making a profit and they're low market share in a low growth market, there's probably not really much point in investing in them. So you would maybe make decisions about what you were going to spend your money on as a business based around what you see in your Boston Matrix. Change is the last part of theme 3. Change is it's a strange unit. I quite like teaching it because it covers so many other parts of the course. It's effectively like the end part of theme 3 and the end part of strategy just kind of reminds us all that within a business, change is constant. And so we need to kind of be aware of what can cause change and what can affect change. And so we've talked about organic and inorganic growth. That's obviously going to change a business in terms of size, in terms of strategy, in terms of market, in terms of all of those things. But we can see leadership changes. We can see culture changes. We can see changes in terms of our ethical perspectives based potentially around stakeholders and their interests. And we can see market changes, things we've just talked about, Porter's 5 forces. We've mentioned new technology potentially when we talked about the Boston Matrix, replacing a market with a new one. And obviously the actions of our competitors we touched on as part of Porter's 5 forces. So all of these different factors will prompt change within an organization. And so it's really important to just understand that when you're looking in these case studies, you are looking for things to change. You're looking for change. Change is an overriding theme throughout paper 2. And so make sure you're looking for what has caused the change, what is the effect of the change. And there's a little bit more on change in the 3.6 video. So that covers paper 2. Hopefully you found that useful. Again, there's not really any predictions in there, so I hope that's not what you're looking for. Because, I mean, if I predicted 3 things and 2 of them were wrong, I'd probably just get a load of abusive comments. So I'm not going to do that. But also, you kind of need to prepare a little bit more widely. But hopefully, this video has reminded you of a few key terms, but also given you a few key areas to focus on. Okay, if you've got any questions, chuck them in the comments. And I will see you soon for the paper 3 video.